Hello, and welcome to Microsoft Dynamics GP year-end close and some tax updates for 2025. Really excited to be here with you for this webinar. My name is Mike Tegeter, coming to you from Chicago, Illinois, Windy City, home of Chicago hot dogs. Happy to see everybody here to talk about everyone's favorite end-of-year subject, GP year-end close. Added special bonus for this webinar is that we've brought on Avalara to talk a little bit about 2025 tax change updates and some information for GP users as well. So we'll have Michelle join us in a little bit. But before I get to all of that, I do want to go over just a few housekeeping items. First, you may have noticed that everyone is currently on mute, but do not worry. You can still interact with us by submitting any questions using the question box located on the GoToWebinar panel. If you run into any technical issues during the session, feel free to use that same question box and we'll assist you as soon as possible. We'll try our best to answer and address all of your questions during the presentation, but if we run out of time, which is likely going to happen, don't worry, our team will follow up with you via email, or you can connect with your Velosio account manager for further details. Now, I'm really excited to get started here. I want to go a little bit over the agenda for today. First, we're going to bring Tina on from Velosio. She's going to talk a little bit about year-end close and that checklist. Then we'll go into the full module checklist after that. And then Tina will dive into a demo of the year-end close procedures right in Dynamics GP. Then we're going to bring Michelle on to talk a little bit about some Avalara and some tax update information. And then we'll talk about next steps if you need any assistance from Velosio. I mentioned their names before. Tina Hare is here with us today from Velosio, and Michelle will be with us a little bit later from Avalara. Excited to have them both here. Now, I am ready to bring onto stage Tina Hare. Hi, Tina. How are you?
Hi, Mike. How are you?
Doing well. Thank you so much for being with us here today to go over the all-important GP year-end checklist.
Sure.
I know you are the professional in this area, our number one GP year-end close Velosio consultant here. So excited to have your knowledge and talk a little bit more about that. So I'm going to let you take it away from here, and I'm going to stop talking.
Great. Hi, everyone. My name's Tina Hare. I'm a senior functional consultant, and I've been doing this for 25 years now. So today we're going to talk about the GP year-end close, and we're going to get started right away. This is the year-end close checklist for GP. This is going to be a summary of the checklist, and there will be a link, as you can see at the bottom of the PowerPoint, that you will get, and you will be able to click on that, and it'll take you to the complete year-end close checklist. So to start with, it starts talking about completing the posting procedures and the closing procedures for all the other modules prior to closing the general ledger, and we'll address what those modules are. Make sure all you post the final adjusting entries in the general ledger. Once you do that, you're going to print an account list to verify the posting type of each account, because that is taken into consideration when the closing process. Then you have an option to close the last period in the fiscal period setup window. Number 5 is an optional step to complete file maintenance, do check links for the general ledger. The next one is to verify settings in the general ledger setup window so that when you close, things close correctly. Then you want to make a backup of everything that you've done to that point so that if something goes wrong, you can restore back to that point in time. After you make your backup, you want to print a final detailed trial balance of your general ledger for the entire year for all accounts. Print it to a PDF. As you know, that can be kind of lengthy. You also want to make sure you print your year-end financial statements, P&L, balance sheet, cash flow, whatever else, other reports that you might print as of your year end. If you haven't already set up the new fiscal year, then you're going to make sure you set up that fiscal year, but typically you've already have it set up. The next step would be to actually complete the year-end close process. Then you can close all the fiscal periods for all the series in the fiscal period setup window. If you're maintaining budgets within GP, then you want to start making adjustments for the budget figures for the new year, and then print the final or print the financial statements for that. And the last step would be to make a backup, and we'll talk about why you make that backup again. So now we're going to talk a little bit about the modules that you're going to close prior to closing the general ledger. And those modules are inventory, receivables, payables, and fixed assets. And you're going to close them in that order. There is no closing for analytical accounting. That will happen actually during the fiscal year, the general ledger close process. Now we're going to go into GP and review the closing process itself. One of the first steps that you're going to do is validate your posting accounts, ensure that they're set up correctly. You can do that by going to Reports, Setup, and print an account listing, or you can use a smart list, which is what we tend to use nowadays. So I'm going to open up Smart List, expand out on Financial, and go to Accounts. There's a couple ways to do this, but what I'm going to look at is a list of accounts. And what we're verifying is if the posting type is correct. So you want to compare based on your account number and your posting type. If something is set up incorrectly, then it will close incorrectly. So you want to validate the accounts are set up as balance sheet accounts correctly or set up as profit and loss accounts correctly. Once you do that, then you can move on to the next step, which would be verifying the settings in the general ledger setup window. So over here under Financial, Setup, General Ledger, you're validating that you have account and transaction history marked. That's important. If you do not have them marked, then it will not maintain the account or transaction history. You also want to verify that your retained earnings account is set up correctly in this window, because this is what will feed to the year-end closing window. As we mentioned, check links is an optional step. I'm not going to do that today because it can take a little bit of time to do that. But if you want to do the check links, it's under Microsoft Dynamics GP, Maintenance, Check Links. You're going to insert your financial series and let that run. Print the report to a PDF and save it in a year-end file. The next step would be to make a backup. So you may need to talk to your internal IT. If you're on the Velosio cloud, you might want to call client care and have them make that backup for you. After you have that backup made, you want to go to Reports, Trial Balance to print a detailed trial balance. So select Detail. You can click New or accept or select an existing one. I'm going to start a new one. Just type trial balance, posting type. I want to print it from my most current open year that I'm closing, which in this case would be 2024. I'm not going to insert anything because I want the entire report. I'm going to print it to the screen. And then I'm going to save this as a PDF so I have a permanent record of it. The next step you would do is to print your financial statements. So you would log into Management Reporter or BI360, wherever you're printing those from, and print those reports to keep them for your permanent records. If you haven't set up your new fiscal year, you're going over to Administration, under Setup, Company, fiscal period, type in the year. So I probably already have a 2025, but if I didn't, I would enter 2025, validate the dates, and click calculate. That'll set up your new fiscal year. Once you've completed those steps, you can actually close the fiscal year. So I'm going back over to financial. I'm going to go under routines to year-end closing. This is where the retained earnings account is that it's going to close your P&L accounts to. So you want to make sure that that's right. Starting journal entry number, just leave it as is, don't change it. You do want to mark, excuse me, maintain an inactive account and tell it to include all active accounts. Otherwise, any inactive accounts without a balance will be removed from the system. You'll note it denotes the last closing year and the year that we're closing. So we're going to close 2024. I'm going to click close year. It does give me a message saying that I have a single use batch. Do I want to continue? Yes. If you're in the current year, you can have unposted batches sitting in your general ledger. This will not affect that. It's just asking you to validate that it shouldn't be part of the year-end close. So I'll click continue. You'll see a green process bar. Now, the one thing to note before I print that report, and that's an analytical accounting report, but before I print that report, on this progress bar, it can potentially hang at like 3% or at step 3, excuse me. And because that's when it's moving the data from the open table to a temp table to the historical table. One thing to note in that regard, you want to make sure you have enough space on your hard drive so that it can create that temp table to put that data in. This is an analytical accounting report. You would want to print that to a PDF to save it for your permanent records. The last report that's going to pop up is the year-end closing report. Again, print it to the screen. It shows what everything that's closing in regards to retained earnings and what's being rolled forward. Print that to a PDF for your permanent records. Now you'll note that it says the next year is 2025, the last year's closing is 2024, and the process is complete. One thing to note, you do see a reverse historical year button on this window. That allows you to reverse the closing if you have an account that's set up incorrectly, or for some reason you need to make additional entries. You can do a reversal to do that. And that's the year-end closing process.
Thank you so much, Tina. Really appreciate your time today going through the year-end checklist. Like Tina said, there are links on that PowerPoint. We're going to make sure that we get this PowerPoint out to everyone, as well as a copy of this recording so that you can go back through it. But make sure to click on that link. Much more detailed checklist that you can grab there that Microsoft provides. And then, of course, if you have any questions or need any help, Velosio is here to help. You can reach out to your account manager or insider at velosio.com. Tina, thank you so much for being here.
Thank you for having me.
Okay, so next up, we are very excited to add on something new that we haven't done before for our year-end close webinars. We're going to talk a little bit about setting yourself up for success in 2025 with the tax experts from Avalara, specifically Michelle. Michelle, thanks for being here with us today for this webinar.
It's so great to be here. I really appreciate it. Nice to see everybody. Thanks, Mike.
Of course. Avalara's been a really big partner of ours, and they have this wealth of knowledge we wanted to make sure was getting out into our client base here, especially as the year ends and everybody's curious, what's happening for 2025, right? So, Michelle, I'm gonna let you take it from here, and I'm gonna stop talking.
All right, great. Well, thank you again for the time today. Really excited to be here and share with you a few different components. When you think about Avalara, usually you are thinking about sales tax automation. My name again is Michelle, and I am a senior sales executive here at Avalara, working on the Microsoft team. So I work specifically with Velosio and their clients to ensure that you have the right tools and the right knowledge in place to make sure that you're really expanding on the investment that you've made in your Microsoft technology and that you are compliant when it comes to sales tax. I'm coming to you from Pennsylvania. It's very cold. I've got the fireplace going on the side. And again, I'm excited to just share with you a few things today. So I'm going to start off by talking a little bit about tax updates, updating you on some of the things that have been happening in 2024 and some things to be aware of and think about in 2025 as you're closing out your year and kind of formulating your tax strategy going forward. And then I'll spend a little bit of time talking about how Avalara can help both in the short term with your year-end close, and then also as, again, you think about your tax strategy into 2025 and 2026. So let's jump right into it. And let me see if I can just flip the screen there. There we go. Okay. So when we think about the challenges businesses face with tax compliance, they're really driven from a constantly evolving and expanding commerce industry and governments reacting to that industry with even more aggressive policies that are often very highly complex, and tax compliance becoming more and more digitalized. As a result, managing and staying on top of compliance has come to require even greater resources and truly expertise, which a lot of small businesses are struggling with. So that's really why Avalara was created, to alleviate the burden of tax compliance, essentially making tax less taxing. And if you've ever seen one of our commercials, more relaxing. So as a leader in sales tax, we are supporting over 41,000 customers with every aspect of their sales tax compliance journey, both in the US and globally in over 75 different countries. And we're able to do that through our deep integrations with over 1,200 different platforms. One key thing to note about Avalara is that our tax engine was created in the cloud 20 years ago. And our very first integration was with GP. So we've been refining that same tax engine and that same GP integration for 20 years. It's no old band-aided technology here at Avalara. And we've really continued to grow that strong relationship with Microsoft, staying ahead of their updates and building additional integrations for both their legacy platforms as well as their cloud services like D365. These integrations and our breadth of services provide a one-stop shop for organizations with flexibility for growth and change. So let's talk a little bit more about the change aspect. So with tax, change is constant. Economic nexus has really driven compliance requirements all over the map. As you can see on this map, thresholds and requirements are really going to vary from state to state. So when you're looking at this, it can be anywhere as low as $100,000 in revenue in a state up to $500,000. You really have to know what the state's rules are. And again, those thresholds can vary and they actually can change as well. So you'll notice that several states have transaction thresholds as well as revenue thresholds, and those have kind of been evolving and changing over the years. A key thing to note about this map, most states are actually going to include exempt sales in those thresholds. So selling exempt doesn't necessarily mean that you don't have a requirement to register and remit or to report out. States are going to vary as far as what those requirements are going to be for exempt sales. Some include all exempt sales. Some are going to include certain types of exempt sales. They might exclude services, but they might include resale. Some other states will exclude resale, will exclude services, will exclude digital. So it really, again, just depends on what the thresholds are in those states, what the measurement periods are in those states, what the rules are as far as what's included and what is not included. So some states have made adjustments to be more friendly to smaller businesses over the years, but most states really haven't. And it's only becoming more challenging as we look into the next layer that's going to come around e-invoicing, which we anticipate to happen in the US at least within the next 10 years. Governments really are trying to capture 100% of taxes on commerce. And to close that gap, the global theme has really been to move more and more to a digital process so that they can have more oversight and more visibility. So if you've been selling globally, you've probably already run into e-invoicing requirements. Although we don't have any in the US yet, we do believe that they are coming. Many states have started to look into it, have started to write bills, and are considering enacting new requirements for the future. So definitely something to keep your eye on as far as the global themes with e-invoicing and how that might impact not only global organizations, but those in the US too, as it starts to kind of trickle down. States like to copycat one another and countries like to do the same. So going back to the economic nexus piece, it's been 5 years, a little over 5 years since economic nexus kind of was first enacted and then kind of domino effect across the country. And as a result, many businesses have really been challenging the additional burden of these rules. And we have seen some changes. So Indiana, Wyoming removed their transaction thresholds as of earlier this year. Alaska, they're removing their transaction threshold as of January 1, and New Jersey is actually looking to remove theirs as well. So we have seen some, elimination of some of those transaction thresholds that present kind of an undue burden on businesses. Two businesses in Illinois recently have challenged Illinois' requirements for remote sellers, again, claiming that undue burden for out-of-state retailers. And as a result, Illinois is actually changing its rule, its sourcing rule, come January 1. So that's going to make it way easier for someone who's shipping into Illinois due to the simplification of their sourcing rules and just kind of one rate to consider. Home rule states have been a challenge. So if you sell into Colorado, Alaska, Louisiana, you know that they are home rule states, which essentially means that instead of collecting all of the state and local taxes and reporting it to the state, you're going to report state taxes to the state. And then you're also going to have to register and file individually with local governments as well. And again, that's a real challenge for businesses because it means registering, reporting, filing, remitting in a lot of additional places for those particular states. That has been challenged as well. So the company Wayfair, they kind of kicked off the whole economic nexus piece being sued by South Dakota, but they were also sued by the city of Lakewood, Colorado for not remitting a local sales tax to them. That kind of case has gone on over the past few years. Lakewood was really trying to get back taxes from 2018 to 2021, over $600,000 in taxes. And earlier this year, that case was dissolved. Both parties kind of dismissed their claims and no court precedent was set. The reason why I share that with you is because, again, home rule states have their own complexities. And again, even though some businesses have been trying to challenge that, those home rule states, still do have those requirements. You do need to be aware of those. Maybe that will change eventually, but we haven't seen anything concrete yet. Use tax is another piece to consider. Many businesses, it's not just the sales tax piece, but it's use tax. Use tax can often be much more complex than sales tax. And to be honest, in the case of an audit, that is often where businesses get caught, on the use tax side. So as businesses are growing, expanding, traveling across the country, doing different projects, they can certainly run into use tax scenarios that can get them in trouble. So a company, Ellison Drainage, South Dakota sued Ellison Drainage for $75,000 in unpaid use tax. Basically, they bought equipment in another state, paid tax there, then brought the equipment into South Dakota to do projects over the course of 3 years. Some of that equipment was only used in the state for 1 day, but they're still supposed to, assess that use tax based on the equipment being utilized in that state. South Dakota won that case. It is up for appeal. So it's pending appeal with the Supreme Court. So there could be some changes to use tax, not sure, depending on how that case goes. But I share this with you again because it's really critical that when you are doing business in other states, that you don't only know the rules in your home state, but you do know the rules in those other states as well, no matter what type of business you're doing in that state, which again makes it so much more challenging as businesses are operating in multiple states, selling into multiple states, really having to know all of those different rules. All right, retail delivery fees. You can't see behind me because I have my screen blurred, but if you could, you would see about 20 boxes sitting behind me of Christmas presents that have arrived that have yet to be wrapped or, boxes broken up, etc. More and more people are having things delivered to their homes. So businesses like Amazon, booming, Uber Eats, DoorDash, right? And states are really trying to capitalize on that and to see if they can kind of get their arms around some what they feel is potential revenue or lost revenue. And so states have been enacting retail delivery fees. So if you're not in one of these states, maybe you haven't heard about it, but it is something to pay attention to. So both Colorado and Minnesota impose a retail delivery fee, essentially a tax for anything that is being delivered, depending on what it is and how it's being delivered. Both states have significant exemptions, but the reality is that it is really a fee, an extra fee, a tax to be aware of. And the state of Washington is looking at enacting it as well. So just like economic nexus, states like to copycat, right? So one state does it, hey, it's working, they're bringing in extra revenue. Other states tend to follow. So keep your eye on the retail delivery fee. You probably have already seen it again if you're in Colorado and Minnesota, but it looks like it might be popping up in some other states as well. Digital products and services. Hey, 25 years ago, this wasn't as big of a deal as it is now, but as digital goods and services continue to just grow and change, we've seen a lot of increased activity in states really trying to clarify their definition over those digital goods, the taxability of those digital goods, services related to digital goods. Audits have really helped to kind of clarify some of those rules. Streamline sales tax is trying to be more proactive about trying to standardize taxation of digital goods, but we've seen a lot of changes. New York, there were 2 recent rulings about tangible personal property and software licenses, being bundled together, thus making it taxable. So one thing that you do want to consider is if you're selling anything that's taxable, if you're attaching anything digital to it or bundling it with a service or a digital good, that could make the whole thing taxable. So a good rule of thumb to consider is, again, if there's anything taxable in that bundle, then the whole thing potentially could be taxable. And then that may include digital things as well. Really looking at Texas. Texas is looking at types of services like data processing services, and could that be taxable? Florida, Michigan, and other states are looking into the taxability of things like Bitcoin and NFT. Should that be taxable? Do we need to, kind of get our arms around that? Again, not a thing, a few years ago, but now it's becoming increasingly popular. And so again, states are looking at, should they be taxing that? And then SaaS in general, more and more states are looking at whether or not that should be taxable. It is taxable in several states already, taxable at a reduced rate in others, and exempt in a lot of states. But again, more as business looks more to being online, states are trying to recover that lost revenue by changing the taxability rules. So definitely things to be aware of. All right, so how does Avalara help? Here's the big picture. Your business engages in purchases and sales, and our services are really meant to provide an end-to-end solution, helping you on both sides of that equation. So at our core, we are a technology company, and we do provide tools and resources to really streamline and automate that sales tax process. Everything from exemption certificates to tax determination and calculation to returns and reporting, both on the sales and the purchasing side, and even that e-invoicing and live reporting that I mentioned earlier. In addition to that, we're also helping to support your tax policy and the rest of your tax process. Things like helping you with licenses and registrations, tax research to determine your taxability of your products and services, and understanding things like nexus, classification of your products for duties and tariffs, and even things like 1099s and W-9s and other related IRS forms. We're also helping businesses with property tax as well if that's needed. And we're doing all of those things in the context of your technology stack. So your ERP, e-commerce, POS, the idea is to really plug into all of those different applications with over 1,200 different connectors. So we've got those pre-built and maintained on our side to make it easier for you to plug into the systems that you're already working on. Plus, we've got flexible APIs as well, so that can help if there's any solution that we don't already have a connector for. On top of that, we also have services like training and support, obviously, to support any of those components that you might have in place, as well as things like sales tax risk assessments to help you in understanding where you should be registered. An added benefit to you is we also partner with Velosio directly. They are a certified implementation partner who can handle all of the implementation for those key components. In addition to the functionality and tools that we have from a software perspective, we also are supporting organizations with managed services. So it's an added layer of support that can really help to outsource things like exemption certificates, returns, item classification, and even license management. Again, fully outsourcing that to get that off of your plate. So when you're thinking about closing 2024 and preparing for 2025, there's a few things that I wanted to highlight specifically. So closing 2024, hey, it's the 1099 season, right? So how do we make that easier for you? Our 1099 solution really helps you to collect, manage, and file those IRS forms. It's trying to make it as seamless and as easy as possible. So number one, it's going to help to streamline and automate the collection and validation of those W-9s throughout the entire year. So if you haven't already done all of your TIN verifications and requests, our solution can help you with electronic requests, automatic TIN verification. All of that information can be simplified and pre-populate the 1099 forms at the end of the year for you. And then we can handle all of the distribution of those 1099s with e-filing, as with an additional TIN check, as well as delivering or mailing those to your vendors. So I did include here for you, we are having a special promotion for Velosio clients for end of year. So if you don't already have a 1099 or W-9 solution in place, you can get 30% off here at the end of the year to get something in place for the new year and make that process a little bit simpler for you. In addition to the 1099 W-9 piece, as you kind of wrap up 2024 and you go into 2025, I always recommend that you consider taking a look at your nexus. As I mentioned earlier, nexus rules and requirements are always changing. So you really do need to stay on top of that. I highly recommend a nexus study every year to just look back at the year and make sure that you haven't missed anything. If you haven't done a nexus study ever or in several years, you may want to look back multiple years. So a nexus study is really going to take a look at all of your activity over the course of the last year to help you understand if you have triggered nexus in any additional states. It's also going to help you understand the amount of liability exposure that you have and give you a recommendation for a good path forward to resolve that obligation, thus eliminating any kind of risk and helping you to get compliant going forward. So Avalara has a whole host of different ways that we can help when it comes to compliance. With the risk assessment, one of the things that I do want to highlight for you is that our standard risk assessment, which is that 1 year look back that I recommended, typically is going to be $4,500. For you as a Velosio client, we're offering it at no cost. So there's no obligation for you to really do that risk assessment and look back and make sure that you haven't missed anything as you go to close out 2024. Again, if you do need to look back further than that, you've never done a nexus study or it's been quite a while, we do have one that goes more in depth, and we're offering a 20% discount on that for you as well. On that path forward, if you do need to register in any states, backfiling, voluntary disclosure agreements, we can help with that as well. And again, we're offering a discount on any of those registrations for you for the new year at 20% off. When you think about compliance moving forward, the big goal really is going to be that automation piece, right? So once you know where you have Nexus, if you're looking to automate moving forward, you really want to consider looking at Avalara's entire compliance suite. The tax research component is going to give you tax research at your fingertips to make sure that you are setting the correct tax policy moving forward. So it gives you access with no implementation to all of the tax research that Avalara has, as well as access to our tax research team. With automation, again, the way that our compliance suite is going to work, we are going to connect directly to your ERP, your e-commerce, your POS, et cetera, to help you to manage all aspects of your tax compliance journey, that tax determination, that calculation, managing those exemption certificates. So we can help you turn that paper to digital, give you tools to communicate with your clients to get those exemption certificates. Really connecting to your systems so that it can automatically call out to Avalara to make the tax determination and that calculation, take into consideration any exemption certificates that might be on file, and then send the correct rate back to you. That process happens in like a nanosecond once you have the system set up. So it's really plugging in again to those systems that you've made the investment in. You stay in those systems for your billing, your invoicing, your quoting. It calls out to us on the back end and automatically adds the tax in. So you're not having to leave those systems to go and look up a tax rate or look up an exemption certificate, et cetera. It's also going to help you with the returns filing, because since we would be doing all of the tax calculations, it's automatically then going to flow over into the tax return side. To pre-populate those, we can handle all of the filing and the remittance for you as well. Keep in mind as you look at the tax compliance suite, and if you're thinking about automation for the new year or even into 2026, any of these components that I'm talking about are optional, right? So you can ease into tax automation. You don't have to go full boat right from the beginning, though there are definitely options, and that's where a conversation with me could be certainly helpful in figuring out what's going to be your best fit. We do have that GP connector. Like I said, we've been refining that connector for over 20 years, and that connector can support not only the tax calculation and determination, but it can support, as I mentioned before, accounts payable, so the use tax calculation, as well as things like cross-border and even global functionality, as well as, again, the exemption certificates and returns. And I mentioned this earlier, but we do have connectors within the Microsoft ecosystem as well, right? So as you're thinking about GP, if you are thinking about moving off of GP within the next few years, no matter what direction you go within the Microsoft ecosystem, we will be there to support you. Likewise, with the rest of your technology stack, again, we are connected on not only the ERP side, but throughout e-commerce, POS, et cetera. So whatever else you might have in place, you'll have the ability to connect that to that tax engine. You can have multiple business systems integrated to the tax engine, and they're all flowing at the same time. So the benefit of that for you is a single source of truth on your compliance data. It eliminates any kind of recalculation or duplicate transactions that need to be happened. Definitely consistency in your reconciliation. So really makes that process as automated as possible, keeping you compliant. And it's flexible, right? So you can add or change connectors as you go, as that technology stack changes. The last thing that I'm going to mention, I'm going to circle back to the tax research piece. If you are not ready for automation, it's okay. You've just not made that transition, or you don't want to go and add any kind of automation to the system you're currently in, because maybe eventually you're going to change that. You really might want to consider the tax research piece. So not only can it help you with determining your tax policy, but it also has the ability to provide you with tax rates, right? So the automated piece, if you put the tax engine in place, out goes maintaining all of those tax tables, rates, and all of those types of things, because you have that automation in place. But again, if you're not ready for that, we can supply you with all of the tax research, as well as access to all of the tax rates, files that you can download or even have upload automatically to your system. And you would still get access to those tax researchers as well for any kind of tax questions that you have. So again, if you're not quite ready for the automation piece, that's okay. There are still tools that might be useful for you. Typically, the tax research piece, it's an annual subscription. There is absolutely no setup involved, so no implementation at all. You can get access to it within the course of a few days. We'll give you some training on it. Typically, it's going to run between 10 and 12,000 annually, but for Velosio clients, we are offering an end of year incentive for 50% off. So you can get it for as little as, $400 to $500 a month. So I've included that information in there as well. And the last slide, to just kind of wrap it up, a quick QR code for you if you are interested in taking advantage of that free risk assessment. Again, just a look back of 1 year to make sure you haven't missed anything on Nexus. You can use that QR code. You can go ahead and order it yourself without even talking to me. Just fill out the form and you take advantage of that. But if you do have any questions on anything else that I've shared today, or you kind of want to talk through, your tech stack and how we can best support you, whether it's in the short term or as you think about down the road, please feel free to reach out to me. My email is there, and these slides will be provided to you afterwards as well. I hope you all have a great year-end close and enjoy the holidays, and look forward to talking to you in the new year. Back to you, Mike.
Awesome, Michelle. Thank you so much for being here today. Really appreciate everyone's presentations. Thanks to Tina for being there as well, talking about GP year-end close. Like we said, this recording and the slides will be available to you. We'll get that out into a follow-up email. If you have any questions, feel free to reply to that email. You can also email insider@velosio.com or reach out to your client account manager if you need anything at all. Thank you, everybody, for being here today. Have a great holiday season.